Monday, November 4th, 2019, Maneco 64, home of alternative economics and contrarian views. I've spoken many times in the last few years about distractions like the divisiveness in the United States in the last few years, the Trump phenomenon, Brexit phenomenon as well, Remainers, Brexiteers, and I continue to believe these are all huge distractions to keep a spotlight away from the fact that the debt is ballooning, the size of government is going up. How can the size of government not be going up when the government is continuing to spend so much? We've just seen recently national debt go over 23 trillion in the US, budget deficits of 5% of GDP in the last couple of years. In the UK is the same thing. We've been told that we've had austerity since the financial crisis under the Conservatives, but the national debt has gone from 600 billion pounds to over 2 trillion pounds. And all this thing about Trump, Brexit, they're all distractions, and people should keep an eye on the debt. And today, there's another proof of this, and it's coming from the FT. Of course, FT is a globalist institution. I do subscribe to them. I have for almost a year. Not that I like the FT. I've spoken many times about the FT, how they wrote a hit piece on gold in 2004, right? How they're totally globalist, but they've admitted today in an article, parties' spending plans signaled the return of 1970s sized state, size of government, right? What did we have in the 1970s? Well, we had stagflation, we had moribund growth, right? That's what stagflation is, high inflation. We already have the high inflation. We're just going to get another dose of government. So to all those people out there who expect things to get a lot better, oh, we're going to leave the EU, this or that. It's just a Pyrrhic victory. Pyrrhic is an interesting word, right? Victory at a very high cost, and that's what I think we're getting. Not only in the UK, but everywhere around the world. Those who think they're getting victories, they're not. So what's the FT saying? Let's go quickly through this article and then look at where the markets are this morning. So both Tory and Labour election promises will result in higher taxes, report warns. Well, Labour and Tories might argue, no, we're not going to raise taxes. But what that will mean is that they're going to spend a lot more. They're going to be more deficits, right? And there will be an indirect tax, which is the debasement of the currency, which we've been having anyway. So let's quickly go through it. Says spending pledges by the UK's two main political parties will increase the size of the state to the levels of the 1970s and result in higher taxes over the next parliament. According to research, both Labour and the Conservatives have promised to increase government spending ahead of the December 12th general election. Under the Tories, spending would rise to 41.3% of GDP by 2023-2024, while Labour's plan would see spending grow to 43.3%, according to the Resolution Foundation, a think tank. In the 2 decades before the financial crisis, spending averaged 37.4% of GDP, and it was 42% of GDP between 1966 and 1984, which includes, of course, the stagflation in 1970s. It goes on to say here, this is a comment from the Deputy Chief Executive of the Resolution Foundation, Matt Whitaker. He says, the shared commitments to ending austerity, reversing elements of it, and big infrastructure plans mean that Britain could be heading back to a 1970s sized state whoever wins the next election, or or if we leave or we don't leave the EU, right? So that's what we need to focus on. That's what people need to focus on, the size of government. And I've always said that. How do we fight the size of government? Well, in my opinion, government can only grow as big as governments are. And they are big. If you go back over 100 years before World War One, when there was sound money, when there was a gold standard, the size of government was relatively small compared to now. There's a saying that back in the 19th century, when Britain was running its empire, it only had 5,000 civil servants. Now we're talking over 1 million civil servants, right? The bureaucracy. So how do we fight that? Well, I think we try to boycott this system as much as possible. And by that, I mean borrowing and spending less yourself, and trying to maybe find ways around not paying as much tax. That would mean changing your lifestyle. And I've done that myself. I used to pay a lot of tax when I worked in the city. Granted, I've been able to pay off my house and everything, so I don't need as much to live on. But everyone has his or her own circumstances. So that's what I'm trying to say. You need to find ways where you pay as little tax as necessary, borrow and spend as little as possible. Do I mean to say that you don't live your life? No, but try to live within your means. That's what I mean. Because when you borrow, you're feeding the banking system and the fiat currency banking system, and that system is the system that allows governments and central banks to thrive, right? They need that. So there you go. It's going to be a Pyrrhic victory, no matter whether we leave, definitely leave the EU, or if we leave in name only, or if we stay in the EU. It doesn't matter. Government is still going to be bigger, if not from Brussels, but from Westminster. So not encouraging, of course. What do you do in such a situation if you have savings in fiat currency and Bank of England notes? Well, as I encourage everyone around the world, fiat currencies, they tend to go to zero, right? Well, they don't tend, they always go to zero. It's only a matter of time. Stick to acquiring precious metals, in my opinion, physical gold and silver. If you're in the UK, I have a promo code with Gold Investments, one of the oldest bullion dealers in the city of London. You get a 0.5% discount if you mention maneco 64 promo code. Okay, let's look at where the markets are this morning. It's 7:45 a.m. London time. Right now, we've got spot gold at 15.13. That's down just under $1. The range has been quite narrow overnight, 15.10 to 15.50. Silver is up 3 cents at 18.14. The range has been 18.04 to 18.16. So we're near the top of the range in silver. The stock market continues to move higher. The Dow is up 48, 27,387. The Dow futures, that is, of course. S&P is up 6 points, 3,072. NASDAQ 100 is up 25, or 1/3%. Currencies. Sterling is unchanged, 129.37. Euro is a little firmer, not that much, 111.70 against the dollar. The dollar is up slightly against the Japanese yen, 108.28. And the dollar's down 0.25% against the yuan, 702.51. Crude oil has rebounded lately. WTI is above 55 now. It's at 56.12. So we've had a good rally in crude. Brent is at 61.50. Also, I think on Friday last week we were below 55 and 60 respectively. What about the bond market to finish off? 10-year yield is up 2.5 basis points, so we're at 175. So that's the other problem as well. If things start looking very good in terms of the stock market going up, right? And then yields start going up, that's going to be a problem for the Fed, because the debt is going up so much. So as I said, they're between a rock and a hard place. And don't be distracted either. Brexit or Trump, no matter what happens, government seems to be getting bigger, and that's not a good thing. Bigger government means that government is infringing on the private sector. You are the private sector, the individual, right? So there you go. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.